Holy moly, the world is becoming digitalized, Batman. Imagine a world where everything is fast, it's quick, and it gets you in and out with healthcare at the snap of a finger. This is what we're going to talk about, and this is a huge milestone that we are talking about with a certain company that I am so excited about. So let's talk about it without further ado. Hi Raylinaires, welcome back to Supergirl Investor. We're here to talk about how to save the world and make you wealthy. If you wouldn't mind smashing that like button, and of course leave a comment below letting me know what stock you would like to invest in. I've been getting so much feedback from you and I really appreciate it, especially on two stocks I'm going to say right now, which is ClearPoint Neuro, expect a video on that, and Karuna Therapeutics, expect a video on that. But today we're talking about a special digital healthcare platform that is leading the way in innovative material, and we have a major breakthrough article that I wanted to discuss, and of course at the end of the video I will let you know my personal thoughts on it. Again, this is just entertainment purposes only as usual, but we'll talk about valuations, all that good stuff. So stick around and let's talk about this major breakthrough, because it has never been done before in healthcare, which shows how healthcare is expanding into a new digital era. Today we're talking about the stock Veeva. Now this is ticker symbol VEEV. Now Veev is a cloud solution for healthcare specifically, and they are very innovative and they are on a digital scale. They offer business, consulting, and training services. Some of their customers include Merck, Moderna, and Eli Lilly. Now in the beginning of the month, they did show a lot of expansion with their earnings report. For fiscal year 2021, total revenues were $1.465 million, up 33% year over year. Q4 total revenues of $396 million, up 27% year over year. Fiscal 2021 subscription services revenue, reoccurring revenue of $1.179 million, up 32% year over year. Q4 subscription services revenue of $322 million, up 27% year over year. So it was very solid growth, and we're expected to see that through after the pandemic, which has accelerated digitalization and made it more easily to adopt. Now we have seen several companies that have been able to adopt this cloud-based service, and this is an article from last week that states that LSK Global PS adopts Veeva Vault clinical applications to streamline global trial processes, and this is a CRO, or contract research organization. Basically, their technology makes everything easy to streamline and make it seamless into one process, and it also helps to make everything more efficient and faster. So now that you know a little bit about this high growth, highly innovative stock, let's talk about the news and why it is a huge catalyst for the company itself. The company has several cloud-based products, but this product is especially important. Imagine something like DocuSign. You've seen the huge growth over this year over its e-signatures. This is something similar. First patient completes digital consent with Veeva Clinical Network in Phase 2B study. Veeva e-consent makes it easier for patients to understand and provide electronic informed consent. Milestone accelerates industry's move toward paperless, patient-centric trials. This is in Barcelona, Spain. Veeva Network had its first patient complete an electronic consent for an early phase clinical trial by Crowfoot Research Center. Veeva eConsent is the first validated application for sites and patients that transforms the consent process from manual and paper-based to end-to-end digital experience. So this is what we're talking about with seamless innovation. You go from signing to consent and you're already into the study. And this is just one patient that was able to do that. Imagine if they could revolutionize these studies and just make it all digital. They have a very high TAM with that, or total addressable market. Patients can review documents and protocols and provide consent via mobile phone, streamlining the experience for both streamlining the experience for both patients and sites. As one of the first sites using Veeva eConsent, we're excited to collaborate with Veeva to help the industry shift from paper to digital consent for the benefit of patients and clinical research. Veeva eConsent makes the process easy for our patients and allows us to break down the barriers of paper and location, expanding the reach of our study. The pandemic accelerated the industry's move to digital solutions that enable decentralized trials and keep studies on track, speed study startup, and improve trial execution. Veeva eConsent enables this transformation through digital consent document creation, approval, and exchange. Sites can use the application for trials across sponsors and automate the flow of consent documents to the investigator site file ISF for better collaboration and greater speed. With Veeva eConsent, sponsors get real-time visibility into patients' consent status, date, and version, and monitors and site personnel gain remote access to trial information. So essentially, it's a work-from-home study that you're able to do instead of being in the exact location between patient and physician. This is groundbreaking. Reducing the time spent on administrative tasks increases site and patient engagement throughout a study. So basically, all the paperwork that was happening on site gets to happen with your either mobile phone or wherever you are on your laptop remotely. In just 6 months, we went from concept to the first patient using Veeva eConsent. This marks a major step forward for the future of paperless patient-centric trials, and we remain focused on continuing to deliver innovations that will help the industry realize this important vision. For those of you who don't know, this company recently became a public benefit corporation, which is helping many stakeholders and helping the patients and helping become more patient-centric. They have more than 975 customers and are growing globally. I think this is a huge milestone. This shows that you can work from home essentially with all of those papers and consent forms. So imagine the amount of time spent on a study and just working with patient and physician on a study in one location, how long it takes to fill out all of those forms via paper, and how time consuming it is, maybe between 1 to 2 hours just to fill out those forms. Now patients can essentially work from home and just do that mind-numbing, mundane paperwork at home, be all prepared for the actual trial, whatever they need to get done in the office with the physician, and then just go back home and tell the results or tell that they consent or have those signatures for all of that paperwork. And I think this helps with the collaboration process, and it definitely helps with the patient's time and the patient's overall well-being. So I think moving forward, this is a huge milestone, and it will definitely help with expenses in the long run on both the patient side and on the physician side. And I definitely think it will help with the overall patient's health. The major catalyst is that they have almost every single week a new adaptation of one of their cloud-based services. So I'm expecting another article next week to come out, or within the next few weeks, about another digital adaptation. And also on April 29th, they are expected to announce this wonderful news and hopefully more news about these e-signatures that are happening in the healthcare trial space. So now let's go over the valuation financials and of course what I will be doing with this. Spectacular news. So the total revenue that I mentioned, it looks like a very healthy company going from 25% to about 20% to about 33% year-over-year growth, which is fantastic. This is what they're expecting for their guidance. I'm sure that they have a lot of preconceived notions about what's going to happen with the pandemic, so they're on the slight cautious side for fiscal year 2022, so I'm sure it will be a little bit more. That's just my opinion, but I think it will be a little bit more growth after seeing some great numbers. As you can see, from 2018, 25% to 2021, 33%. Looks like they keep accelerating their growth. So maybe this might be a step back of a year, but I think with their digitalization, they will be increasing their revenue and increasing their growth in many years to come. Now, their subscription revenue is what made me very interested in this company, because as you can see, it is growing. Again, it's growing year over year. It's done nothing but increased from 2018 to 2021, from 24% to 32% year over year. And this year, again, err on the side of caution to 21%, $1.43 million in subscription revenue annually. And this is just the recurring revenue, which is fantastic. Now, if you look at their total gross margin, which has been pretty consistent, I think that it's actually pretty good with 74% in total gross margin. I think if they want to continue to scale at a good level, that they will need to increase that gross margin a little bit more. But again, they're erring on the side of caution. And they definitely have enough runway for all of their R&D and to stay in business. Now they have $635 million for fiscal year 2022 expected. For 2021, they had $551 million. So plenty of runway there. So this is what got me very excited seeing their presentation. Now this is from 2020, but they have yet to release their 2021 presentation. But this is what got me very excited, and this is exactly what we want to see as far as acceleration and growth is concerned, which is why I personally think this is a high growth stock. So as you can see, the bottom of the this always reminds me of roller skating. I don't know why. This is the e-consent, which we were just talking about, and Site Connect, which all of these are part of their services. It says deep pipeline of products in the early stages of market adoption. So we are in the very early stages of market adoption. Now they're going from paper-based to digital, and it is just starting. So just imagine the revenue when it starts to explode. So those are the innovators. Then we go to the early adopters with CDMS, payments, publishing, training, and safety. And then early majority, CTMS, QMS, registration, subs, archive, study, startup. And then we go to the middle majority, ETMF, quality docs and submissions, and later adopters. And this is part of the market share and what they think is going to happen with the market share. So we've only just begun. This is exactly what I'm talking about with digitalization. It is supposed to grow exponentially within the next 5 to 10 years. And in 2025, they are expecting $3 billion in total revenue. And today, for the digital healthcare community, they have a TAM, or total addressable market, of 12 billion with a B. So this is huge. This is set to explode. And if they can get just a little piece of the pie day was on Sunday, but a little piece of the pie, then they will be able to have huge revenue growth. Now you can see that TAM today is 12 billion plus, and they have far exceeded their revenue. They have far exceeded their expected growth. So I'm expecting big numbers, to be quite honest. So it's $2 billion in data cloud, $1 billion in patient data and analytics. Of course, this is the commercial sector in the cloud. $3 billion in original commercial cloud. And then we have their vault. So $1 billion plus vault outside life sciences, $5 billion vault for life sciences. So they have an exceptional, diverse community of cloud-based services. Now, the markets overall, due to the interest rate going up a little bit for the 10-year treasury bonds, the high-tech growth companies and growth stocks have been in a very bearish spiral, to say the least. It is showing a bearish pattern right now, and it is showing that it is at a low of currently $259.39. Despite this bearish pattern, they have an overall buy rating of $327.10. Morgan Stanley has recently maintained this to overweight, and Citigroup has maintained this at a buy rate. 89% institutional holders, and these institutions are Vanguard, BlackRock, you name it, the bigwigs. So if you wanted to get your feet wet in a digital healthcare company that is set to expand tremendously in the next 5 to 10 years. Now, this is a long-term play, so the next 5 to 10 years, once we get through all of these bearish signals within the market in general, then you have a very good chance of holding a solid high-growth stock that is pretty much set to expand and explode. So what am I doing about this? I am going to hold, as I am a long-term investor. And a lot of you have been asking me on Twitter. Go follow me on Twitter. It's the same Supergirl Investor. This is one of my high conviction stocks, and I just think with these e-signatures, it's going to set to expand even further. Now, this is in Spain. Imagine when it gets to the United States, what's going to happen digital-wise. I would also yield on the side of caution for March and April, because there is something called capital gains tax, and we know that the market went all the way down, Gaston voice, down in March. And in April, it slightly recovered, but not too much. Now, institutional investors are taking profit. It is after a year, which means that taxes are not excruciating after a year of taking profits. So they will be taking profits in March and in April. So just expect a little bit more pullback, expect a little bit more drop for them to take profits. I know they're saying it's the interest rates that are causing the stock market to go down, but I also think it's a little bit of the institutional investors that are avoiding the short-term capital gains tax and going for the longer term capital gains tax, because they did make a lot of profits this year. So of course they want to secure those profits, but with less taxes, and you can only do that after a year. So there's definitely some profit taking going on, which is good for us. I mean, hey, they can take profits all they want. We will be there to get those very cheap shares. This is just for entertainment purposes only. Thank you so much for watching this video. Please leave a like if you like this. Share with your investor friends who want to save the world and be wealthy. Now go out there and do that. Bye, Raylinaires.